We look at the protection gap in India. India today is at 85% in terms of sum assured as a percentage of its GDP, as compared to 332% for Singapore, 250 for Japan, 250 for the US, but even Malaysia and Thailand are significantly ahead of us. Demographics in India will be a key driver of this play. Middle to high income households are growing rapidly, and they will be 50% of the population by fiscal 30. The Viksit Bharat goals outline insurance for all by 2047. The need for insurance is becoming even greater in a world that's becoming more uncertain, especially as disposable income rises, awareness rises, and security for family will always be a key driver for people. More importantly, for rural and semi-urban India, we see a significant access gap. Rural India is 65% of population, 45% of our GDP, but only 2% of life insurance branches are in rural areas. We looked at the critical success factors in this industry. The most important one is brand and trust. This is a business where the consumer must trust the business to be able to fulfill its promise to the consumer. The control over distribution is important, which we have with Mahindra Finance. A very strong capability around underwriting products, around reinsurance, and this is something that our partner brings. Manulife is one of the largest and among the most respected insurers, life insurers in the world, and they're going to be our equal partner. And execution excellence, this is something that you've seen from all our businesses, and it's now something that we feel we can bring to this business as well, to be able to deliver the promise that this business has. Let's talk about Manulife. It's a leading Canadian life insurer. More importantly, in Asia, it's among the top 3 insurers, has large businesses in a number of different countries in Asia, understands different markets well, has been very successful globally. 1.1 trillion in assets under management, 36 million customers, understands agency very well, is a leader in that space in many markets, has very strong reinsurance capabilities, important from a capital standpoint, and is delivering consistent returns at 16.2% core ROE in 2024. Manulife is our partner for the asset management business as well, and they're a wonderful partner. We work very well together, essentially as one, and this is in many ways an extension of our partnership. We talk about right to win. Why would a customer buy from us? And what you see on this page is a very significant right to win, from brand trust to our distribution to treasury relationships that can help unlock banca. Manulife brings in the product underwriting, reinsurance, and agency management expertise that it has. And collectively, we've got a very strong footprint around technology, digital, and AI, which are going to be critical for this venture as well. As I mentioned earlier, this is an extension of a financial services footprint. So from lending, asset management, insurance broking, and now life insurance. And this is one that falls very much in our aspiration for Mahindra Finance to be the leading financial services provider for emerging India, for rural and semi-urban India. So this is one that really fits in very well with our financial services footprint. Our approach, and while there is a lot on this page, I'll just cover the key points here. Once again, to be the #1 life insurer for rural and semi-urban India, but also serve our urban customers and take a leadership role there in protection solutions. So protection is going to be a focus for us, but again, not the only product. We will have multiple products. Mahindra Finance distribution has 1,345 branches, with very strong coverage in rural and semi-urban India, access to 25 lakh life customers, which in itself is a very strong base for this joint venture to tap into. A premium agency network is what we will build along with a digital enabled ecosystem, and these will be factors that will help us create a very sharp and focused strategy and be able to deliver on that promise to create meaningful returns for our shareholders. As we talk about returns, it's an area that obviously is very important from our standpoint. Starting first with the capital required, as I mentioned earlier, we expect to deploy about 250 crores a year for the first 5 years, a total of 3,600 crores over 10 years. This is the Mahindra commitment. Similarly, Manulife would put in exactly the same amount of capital. And with the global reinsurance expertise that Manulife has, it's possible that this capital requirement might come down as well. What we believe we can accomplish with this is create a business that in 10 years will give us a valuation of 18,000 to 30,000 crores. Now, we do believe this is a conservative set of numbers which we can achieve. There will be upsides to it, and there are a few upsides that we have not factored in here. From a profit standpoint, though, this will be break even only closer to year 10. It's a business that has certain dynamics that will require time to break even, especially as you grow the business. But valuation is based on the embedded value, and therefore that's how the market would look at it. And for us, it's not just about 10 years, it's about creating a business that's a very strong and meaningful value add for the group over a longer time frame as well. And that's where this business will be very well positioned. And immediate benefits to Mahindra Finance from the distribution that it will drive, and therefore the accretion on the ROA for that business. In summary, these are the four areas that we talked about a year and a half ago when we said that we will look at 1 to 2 new areas, and we would look at, do we have a strong right to win? Do we have a meaningful potential, market leading returns and ability to execute? And very similar to the SML acquisition, where we made that to enhance our trucks and buses business. And we did it in a way where we felt that it would add compelling value. It's actually adding more value than we had even thought of at that time, which was a few months ago. Exactly like that, we feel that this venture will also add meaningful value, and we will be able to come back and show that this is something that will be a huge accretion, not just to Mahindra Finance from an ROA standpoint, but to M&M shareholders in terms of the value this creates. With that, we will open it up for questions.
Yes. Please send your questions, and I'm getting the questions as we go along. Anish, the first question has come from CNBC, Yash Jain. By when do you expect to apply with IRDAI, and by when do you expect to start operations? And there are a couple more, but let's start with this because this is a question that everyone's asked.
So we expect to apply for the license in about 2 to 3 months. And realistically, it will take 15 to 18 months for the joint venture to start operations.
Okay. There are many existing life insurers where promoters are looking to sell. Would it not have been a better strategy to acquire one of those and get Manulife in it? Also, acquiring an existing insurer would have given you some distraction strength.
So we feel that we've got a very strong proposition here. With Mahindra Finance distribution, with the customer base we have, not just in Mahindra Finance, but also across the Mahindra Group, we feel we can build a much stronger business. The way we've started it, it's also a lot more capital efficient and one that will return much greater returns for our shareholders.
There's a question also on why choose life insurance and not general. You sell cars, tractors, the motor portfolio. That would have supported, you would have got support from there.
Life insurance is underpenetrated today, and we see a tremendous opportunity here, and which is why we've started with life. If the insurance regulations allow a composite license, that could be a potential upside for the JV, and that's something we will evaluate when that happens. And yes, general is attractive as well, but given the opportunity we see that's very meaningful today, we've started with life.
Okay. Going to Economic Times now, Shilpi's asked, some of the questions are repeat questions, so I'm skipping those, but has the management team or CEO for the new JV been identified? Will leadership come primarily from Mahindra, Manulife, or external hiring?
So all those details will follow. We have, as you would expect, a structured approach to this. And as soon as we finalize those, we will share those details.
She's also asked, what is the estimated break-even period for the life insurance venture?
So again, typically the break-even period is 10 to 12 years. We feel confident that we can improve on that. But I think once we start operations and once we start seeing how things are moving, we'll have a better sense of the exact time. But at this point, I would just say that we will break even much faster than what most others have done.
Sure. Now, switching to NDTV profit, Vishwanath has asked questions on why focus on semi-urban or rural locations for this.
So Vishwanath, the focus on rural and semi-urban comes from Mahindra Finance's strengths, one. Second, from the fact that this is an underpenetrated area. Only 2% of life insurance branches are in rural and semi-urban. It's also an area that's emerging very rapidly in India. There is a significant amount of wealth creation in rural and semi-urban, and we feel that we should offer the set of products to that area as compared to what they have today. It doesn't say that we will not focus on urban areas. We will, and we feel that we've got a compelling value proposition there as well, and that will be focused on protection, but we will have a suite of products that customers would need.
Okay. Anish, one more question from NDTV Profit on how do you see the recent buoyancy because of the GST cut from the government on life insurance? Is the JV trying to capitalize on that?
So the JV will benefit from that clearly, and we're building this for the long term. In that sense, the momentum that we have today is a very good place to start with.
All right, some questions from Outlook Business. How do you plan to tackle competition in the sector, which is dominated by one state-owned insurer?
We believe that this is a huge space, and there is room for many to play, as we've seen in the banking sector as well, and as we've seen with NBFCs. And the customer base we have, the connects we have, the understanding we have of markets is something that's going to help us play in a very meaningful way here.
Okay, moving to business Financial Express. Narayanan has asked, what is the distribution synergy that you see for the life insurance JV with other businesses like Mahindra Finance and Mahindra Insurance Brokers?
So Mahindra Finance has 1,345 branches. Mahindra Finance also has a corporate agency license, and with some of the work that's been done there, Mahindra Finance today is very well positioned to now pivot to growth and have some of these businesses contribute meaningfully to its bottom line and to its ROA. And therefore, that's going to be a key factor. But in addition to the Mahindra Finance distribution as well, this venture will look at banker. There are a couple of potential opportunities we feel good about, which we will disclose as time goes on. We will look at agency because it's one area where Manulife is very strong at. Manulife is also very strong in affluent customers and products for affluent customers. So serving urban customers with agency networks and Manulife's expertise is going to be a key area. And the digital channel. This is one where we bring a lot of strengths in, both from Mahindra's standpoint and from Manulife's global experience. And we aim to build a very strong digital channel, which will only grow with time to come. And therefore, it's a combination of Mahindra Finance, digital, banker, and agency.
Subrata Panda from Business Standard and Laltendu Mishra, I have questions around whether general insurance will be the natural extension, and do you plan to get into it at what point?
Yes, general insurance is a natural extension. We will look at this when the insurance regulator allows composite, and we feel that that will be an upside that we have to the numbers we outlined here.
From Money Control, Hamsini is asked, how will this business be housed? Will it be a subsidiary of M&M Finance or M&M? Why should the business be funded through M&M Finance's dividend? What's your overall strategy in financial services, given that M&M Finance hasn't had a good patch for almost 2 years now, and you did consider an investment in RBL Banks a few years back?
So this is housed in M&M because of various reasons. Regulatory is one of them in terms of how we've seen other groups and NBFCs also take this path, and it's therefore the most expedient one. From a capital allocation standpoint, we're careful about how we spend capital, and which is where, as this is an extension of financial services, effectively, we've earmarked 1/3 of Mahindra Finance's dividend that we get for this business. And RBL, I know, is a favorite topic, but as we've said earlier, that was primarily a treasury investment. We made a 63% return and exited already.
From Mint, Anshika has asked, you mentioned using Mahindra Finance's distribution to grow the insurance business. The NBFC already has a corporate agency license, which currently operates under open architecture. Is the plan to sell or distribute only in-house life products once the JV begins operations?
From a regulation standpoint, every distributor has to work with multiple companies, and therefore Mahindra Finance will follow that regulation, and it will offer products of other insurers as well. But the strength that we see that Mahindra Finance has, and the strength in products that can be offered that are customized for Mahindra Finance's customer base from Mahindra-Manulife, will make this a very strong partnership.
Okay. Malvika from Money Control has asked, what will be your initial product focus, protection plans, term insurance, or saving linked policies?
So we will offer all the products that customers want, but we feel that we will have strengths in protection and can create a very strong and compelling offering in protection.
Okay, I think we've answered most questions because a lot of them are repeat of what you've already answered. So, okay, there's one from NDTV Profit that's just come in as I spoke. What is the likely revenue or profit contribution from this JV business to the consolidated business you expect once the company breaks even in 10 years?
So we have outlined the business plan. That's something that we will disclose as we go forward with analysts and investors as well. At this point, what I would say is we're building this business for meaningful value creation opportunity that will obviously be driven by profits, but specific numbers on profits is something that we will disclose as we outline the entire business plan at some point in the future.
All right. I hope we've captured all the questions. Thank you, everyone, and thank you, Anish, for taking us through this presentation and the Q&A.
Yeah. Thank you.